We're going to beat the Gartman letter this morning, Dennis, and get your first reaction as to what you are doing on this shock election result.
I think the first thing that one has to do is go to the sidelines if you're not already there. If you didn't get to the sidelines before the vote, get to it now. If you're long, use the fact that that the Dow has rallied 300 or 400 points from its lows, that the S&P futures are up, 40 or 50 from their lows. Use that as an excuse, as a reason to get closer to the sidelines if you can. I voted for Mr. Trump. I was not happy to have done it. I did it by holding my nose and pulling the voting booth machine. But I am fearful of his trade protectionism. I'm fearful of rising movements towards trade tariffs around the world, and I'm fearful of what this means globally. I don't think we're going to get a post-Brexit bounce. I think this is something far more serious and far more onerous.
You mean a prolonged sell-off in the market? And just add in some of your other commodities that you watch so closely. Gold is trading higher. The Japanese yen, some of those currencies that are safe havens are trading higher. Are you loading up on that kind of protection?
Well, I'm not sure that I would follow the yen as dramatically as it has moved overnight. It's really quite extraordinary. For people who don't follow the foreign exchange market that much, one big figure move in the yen is really quite a large move. We've seen 4 big figures overnight. We moved from 1 point to above 106, if I'm not mistaken, down to 102. We're trading 103.50 as I look at my screen right now. Those are extraordinary moves. I think that one can continue to be bullish of the gold market, but as I have said for months and months and months, and actually for years, I'd much rather own gold in euro terms. I'd much rather own gold in terms of the currency that I think shall continue to devalue in price. I think gold probably wants to go higher even in dollar terms, but I'd much rather own it in dollars.
Dennis, tease out your thought briefly, if you would, on why you think this is not an analogous situation to Brexit. In other words, with a quick drop and a swift snapback. Why do you think this is a longer-term issue for stocks and maybe the economy?
We're the United States. We're not the UK. We are far more important in world trade than the UK could be or ever has been. And I think that, first of all, that's important. Second of all, I think that the movement towards rising tariffs and greater movements away from free trade towards populism is a philosophy that is catching on around the world. We've seen this happening in Austria. We're seeing it happen in Japan. We see it happen in Spain. We see it happen all across Europe. This is something that's endemic, and I find it discouraging that rather than moving towards freer trade, we're moving towards tighter, lesser free trade, and I think that's the reason why I'm fearful of what's happened here.